What's going on, everybody? We are back with the Market Master series, and this is part 2, talking about fundamental analysis and how you use fundamental analysis to give yourself that trading edge. So, at its core, fundamental analysis is understanding the balance sheets of a company and understanding if they're profitable, not profitable, and why. So when you dig into it and you find different companies, you might say, I like ExxonMobil, or I like Tesla. Somebody might go to you and say, oh, why? And you might have a blank pause in your face because you don't know why. Some people might go and say, oh, Tesla sold 20,000 cars last quarter, or ExxonMobil, oil's at an all-time demand right now, so they have to be doing good on the balance sheet. Is that the case, though? Are they? Do you know? See, these are the things you have to dig into on a stock company and figure out how good a company is doing. What do they make? Is there any big news coming out for them soon? What's their price to earnings ratio? These are all questions that we're going to help you answer now and understand where to find it. So first, I'm going to start with the easy ones since we have TD Ameritrade right here at Thinkorswim. If you click on live news down here, you'll be able to figure out different news that's going on with different stocks. This will help you understand what's currently going on in the company to make sure there's nothing you need to be aware of that could really throw you for a loop. So you can see, we'll go to this one right here. This one looks good. Let's see, there's an article on electric pickup concept will continue to evolve in 2024. This is talking about electrical pickup trucks and how it's going to evolve and how Tesla just came out with the Cybertruck. These are different articles you want to see and you can read into on what's Tesla doing, what's their initiative for the future, or you can actually just go to investor relations sites on different companies and really understand what's going on from the key points. So if I go over here and I go to let's see, I'm going to type in Tesla Investor Relations. There we go. So if I go here, I just Googled Tesla Investor Relations, and then this gives me different press releases, different articles, different webcasts that they've had the past few months. That way I can understand what's going on with the company and really dig into, are they making money? They have a big news coming out. Looks like they had some splits back in the 2022. Looks like they're talking about the cyber delivery event. These are all things you want to dig into to see how well or how poorly a company's doing. You can also go to their SEC filings here, and this is going to tell you their quarterly reports, basically how they're doing each quarter, how many units they've sold, if they're behind, to catch up on any loans. This is where you really dig into the concepts on the financial side of what's going on in a company. All you got to do remember on this is positive is good, and making more money is even better. So there's a few things I do want to talk about. There's a couple of key indicators you want to look at on the fundamental side. You want to look at the price to earnings ratio, how much debt the company has, and what's their earnings per share projections in the next coming years. If you can understand those basics, you will give yourself an awesome trading edge when it comes to fundamental analysis. Doesn't matter what the company is, if they say their earnings per share, their EPS, is forecasted to increase next year, you bet that that means the value of that stock is going to go up. Remember, that is how much they earn per share of the company that they have. The higher the EPS, the more valuable that stock share is going to be in the future. So now let's talk about PE ratio. PE ratio is your price to earnings ratio. What that is the value of the stock compared to the earnings it brings in. Usually if you see a low PE of like anything below 0, so in the negatives, they're not bringing in anything, they're burning money. But if you see something that's positive and on the low side, that could be potentially undervalued. As time progresses with inflation over the years, you'll start to see PE ratios slowly tick higher and higher, and as stocks tend to go up in value real quick, their PE ratios will really go up really fast with it. So you want to be a little cognitive of not buying stuff with PE ratios of like 300 or something like that, because that means the stock is trading at 300 times its actual value. So you want to make sure that you're sticking somewhere between that like 5 to 100 range. This really depends on several other factors that come in, but you really want to avoid companies that have a super high PE ratio. So just understand that in the future, but that's one of those things you want to understand, especially for longer term investing. You want to find low PE ratios for entry opportunities. If you're trading on the quicker side, PE ratios can be ignored. However, you really want to focus on EPS growth and how that's changed either during that period of time. The last thing I want to talk about is how much debt the company has. So debt is not a bad thing. It's just always good not to have it. People might beef me up for saying Dave Ramsey has some good ideas. To an extent, I agree with Dave Ramsey. Honestly, I think he is AA for people with spending problems, but that's a whole different conversation. What we have here on this situation, companies take on debt usually to make more money. If they're taking on debt to pay off people, if they're taking on debt just to burn more cash, that is something you want to be aware of. And that comes down to reading what the company's doing, if they're making any sales. You want to make sure that sales is going up and EPS is going up. And if they have some long-term debt, that's okay, as long as sales are going up. You always want to be a little weary if sales are going down whenever their debt is going up, because that means they're picking up more debt and not making enough money to cover that debt. So that's some things you want to consider, and you really want to look at from a business mindset. At the end of the day, fundamental analysis is understanding stocks at a business mindset. And once you got that, you're ready for the next step, which we'll get onto in the next video.